I would like to introduce today's presenters now. Michael Jansen, Chief Research Officer, guides the practice's research agenda and architecture by leveraging his extensive experience to identify and unlock emerging trends. Shirley Hung, Vice President, is a member of the Business Process Services team, advising senior stakeholders of global services, including enterprises, service providers, and investors in their strategic mandates and initiatives. David Rickert, Vice President, leads Everest Group's sourcing and vendor management and customer experience management services offering for EMEA clients as well as select global accounts. And Sharang Sharma, Practice Director, assists clients on topics related to enterprise adoption benchmarking, optimizing delivery models, go-to-market strategy, and market opportunity assessment with an emphasis on customer experience management, CXM. And with all of that, I would now like to turn things over to Michael. Take it away.
Thank you, Dave. Wow, what a year it's been. If you think back where we were right about a year ago, we had the shock and awe of the pandemic setting in. We had the immediacy need of the work from home business model changes or the delivery model changes. But if you think about where we've evolved to, we've almost come full circle. And businesses in many parts of the world are returning to some sort of normalcy. But the priorities have not changed. In fact, you could arguably that the priorities that we had going into the pandemic have now accelerated. So many businesses were thinking about business model changes that were more focused around digital delivery. They're more focused around the customer experience and employee experience. And while we might have had a hiccup in the middle of last year or the early part of last year, those requirements and those needs to change the business model have done nothing but accelerate. So what you're going to see today in the data here is the numbers that we've acquired and the context of where the market is today and where we see it going in the near future. So with that, Shirley, why don't you give us some context specifically about the CXM marketplace? Thanks, Michael.
So if we kind of think about the events over the course of the last year or so, what was really incredible to see on a whole was that the CXM, customer experience management service providers, really showed and are continuing to show great resiliency through these unprecedented times. And they're doing this by effectively managing disruptions through leveraging digital solutions and shifting to remote working models. And even more impressive is that there really hasn't been any major security incidents or compliance breaches. And if we think about the third-party service model with the outsourcers, they've really been recognized as weathering the challenges that have surfaced much better than in-house centers as well. We know through our research that even during economic downturns, companies prioritize customer experience initiatives. And while other projects may be delayed or canceled, improvements in customer experience is still viewed as a key investment, since it can also lead to changes to the business models as well. During the early stages of the pandemic, when there were massive CX volume surges, enterprises and their CXM service provider partners worked together to accelerate AI-based automation plans to handle customer queries, while in parallel, they were setting up their agents for remote work. And while there were a couple of minor hiccups along the way, disruptions were much lower than what anyone could have expected. And even regulated industries such as banking and healthcare, when forced into a work from home situation, which they wouldn't have even considered pre-pandemic, they were able to ensure that the necessary data security and regulatory compliance were in place to deliver customer support in this unique remote environment.
Thanks, Shirley. I think what we also show on the next slide is that as a result of the pandemic, what we saw is both enterprises and service providers pivoted to working from home. And we're expecting that this, even though once the crisis has abated, we expect that both buyers and service providers will continue to leverage work at home models as part of their delivery models. Even if it's going to be in a hybrid model, we're hearing a lot about, where people will be working from home a couple of days and working from the office a couple of days, or in a more of a full-on work at home model. And if that's whether it's going to be the part of their long-term operating model, or whether it just becomes part of their business continuity plan. And I think when we talk about coming to sort of business continuity planning, we're also seeing this is a major focus area, especially for the buyers. I know that service providers have always focused on business continuity planning, but I think a lot of buyers have often paid this lip service, but we've seen that the results of the recent pandemic has really made buyers start to take their business continuity plan seriously and making sure they're as robust as they possibly can be. And then lastly, I think what we're seeing is that buyers are actively looking to adopt more automation as well as elimination initiatives. And this is really to reduce the volume of contacts that they have to handle. And this is mirrored by service providers who are aggressively targeting these areas to be able to add value to their clients and really take advantage of the move from buyers to be looking to do more automation and elimination. I think the sense is that if you've got bots, etc., and you've got technology that can handle the incoming contacts, they're not likely to get sick, and it's much more of a robust BCP than just relying on the human elements of it.
So David, it's been an interesting year here in terms of some parts of the world are coming out of the pandemic, and others are still in it, and some are actually in some pretty grim times here. But talk to us about some of the news the companies are making now about or post-pandemic plans for their businesses.
Yeah, thanks, Michael. It's really timely, actually, because I think that we heard this morning in the UK that the BBC did a survey, and 43 of the top 50 firms in the UK have confirmed that they're going to be operating in some sort of hybrid model moving forward. So that's really relevant and timely. And what we've also seen, and I think Google have announced it within the last 24 hours, that they're actually going to move to a hybrid approach as well. And their aim is that they're going to have people working from three days in the office and 2 days at home. And that's going to be the large percent of their workforce, although they are saying about 20% of their workforce will be working from home full time. So I think that what we're seeing is that there's lots of discussions going on around the right operating model, but now companies are coming out and actually trying to give certainty to their employees around what the future looks like. And it's largely looking like it's going to be hybrid.
Yeah, and I think the pandemic forced the hand, but I think we're now looking at new ways of doing work that's going to be more permanent in the go forward here. And I think the challenge will be to see where that eventually ends up in 1, 2, 3, 5 years down the road.
Yeah, no, I totally agree. I think Sharang's going to give us a bit more detail around how the service providers have reacted now.
Sure, thanks, David. Now, speaking about service providers, we saw that a number of CXM service providers, they were quite quick to adapt to remote delivery model as the pandemic took hold in 2020. And most of these service providers undertook several measures to ensure that the services that they're delivering don't get impacted for the customer, as well as their own employees can adopt to a new working environment with the least possible disruption. At the peak of the pandemic in April, May 2020, we saw close to 70% of the total CX agents working from home. And the service providers undertook several measures to ensure that the agents could be provided a safe environment for work where they could minimize the risk and exposure to COVID-19 for their agents by adhering to different safety, hygiene, and social distancing norms. For this, we saw that service providers shifted all their workforce wherever possible, and of course, with client approval, to a remote delivery model and ship laptops, desktop, and other hardware to enable remote network connectivity. Some service providers also set up specific cloud-based work from home offerings, which could be deployed in as little as a week. Then what we also saw was that to minimize disruption for clients and ensure business continuity, several measures were undertaken, such as self-help portals for the customer, including website forms and chatbots, as well as moving customer volumes to asynchronous channels such as chat and email from voice. And then finally, at the behest of clients, some operations were also moved back onshore. Now, security is a major concern, and customer security concerns were promptly addressed by strengthening things like security capabilities through virtual desktops, customer data encryption, AI-based monitoring, and activity recording. And then we've also seen proprietary platforms being set up to enhance challenge management profile through use of online engagement, performance management, and collaborative tools. Service providers are also looking at virtual hiring, onboarding, and training models as they prepare themselves for the long haul. Finally, all of this also had an impact on the capital expenditure that that the service providers had to incur, with the cost for internet cards, broadband connections, and equipment purchase and shipment escalating costs. Service providers in 2020 also saw an unsteady pipeline with several renewals getting cancelled, even as there were new signings in industries such as gaming, edtech, food and delivery, supply, and healthcare.
All right, so let's get some data from you guys, those that are on the webinar, and we're going to do our first quick poll here. And so the question is, what model are you planning to deploy for your CXM post-pandemic? So there's a number of options here. I'm not going to read those to you, but go ahead and place your vote here. We'll leave this open for about 15 seconds. I got one undecided and almost everything going into one specific answer. So we'll leave it open for another 3, 2, 1. All right, Shirley, get your opinion here on what you see in these answers here, but overwhelming results in the mix category, that middle category. I guess not too surprised. Maybe if there's a surprise on here, there's the more focus toward that primarily work from home for a quarter of the audience.
Yeah. I mean, as David was saying before, it's not necessarily a surprise that hybrid is coming out on top. But one of the things that to keep in mind is that there's many different versions of hybrid, and those, in this specific case, actually doing it on a rotation basis seems to make a great deal of sense, because then you can schedule it in such a way that you can perhaps have the same teams be in the office at the same time, and you get some of those benefits of collaboration and having that face-to-face relationship building connections, and still kind of give flexibility as well as some of the BCP benefits of being able to enable remote working at certain times as well.
Yeah, your eyes definitely go to the larger bars out there, but I was joking about the undecided at 1% or 2%, but also equally interesting is the full-time work from office is almost nothing either. So there you go. All right, so let's move on to the role of the digital, and with that, we're going to get David. You're going to talk to us a little bit about the role, and then we'll move into the market adoption, and then we'll talk about some of the service providers. So David, tell us what you think seeing on the role of digital in this segment.
Yeah, thanks, Michael. Yeah, I think when we talk about digital CX, I think it's important to call out that we don't just talk about the technology, so the things like analytics or RPA or intelligent virtual agents, the bots, but we also talk about the human elements that deliver digital CXM. So that's things like the customer journey mapping, the design thinking, and CX consultancy, which really can then help end users to start thinking about that end-to-end journey of what they're looking for. And this is an area where enterprises don't always have the skills or the bandwidth to be able to do. And what they've historically done is leverage consulting firms to do a lot of this work for them. But what we're actually seeing is an increase in the service providers building consulting offerings around this area, which then they can use as either standalone engagements to engage with clients and give them additional revenue streams, or as part of a pre-sales engagement, which then leads on to them looking to take on the end-to-end journey. So when we talk about digital CX and digital CXM in the next few slides, we're thinking about the technology as well as the people elements. And I think on the next slide, we talk about the fact that actually we're seeing this market grow. So I think the traditional CX market was obviously under pressure from digitalization, and people have been looking at moving more digital over the last few years. But I think in the face of COVID-19, we saw a dramatic increase in terms of people having to think about how do we better serve our customers, people having to move to a remote working model, but customers being remote as well when you look at things like retail. So what we've seen is actually there's a real preference for this cloud-based modernized infrastructure So what we're seeing is we were expecting to see digital CXM grow from 6 billion to 11 billion in 2022, but actually with the COVID impact as well, we're expecting that to actually get to around 17 billion. So an extra 6 billion of growth. So we're really expecting to see the growth in the digital CXM space grow, partly because that's the way the market's going, and then accelerated by COVID. And I think that's driven by, on the next slide, we talk about, so why is this growing, and what do people want? And I think one of the things we see is that self-service solutions, when we look at those, are really popular with both enterprises and consumers. So I think it's important to remember that when we talk about any of these solutions, that they're not just an FAQ, but actually they provide greater functionality. They need to enable enterprises to take control of the conversation around their offerings. It serves as a 24/7 knowledge base, but it's also being able to guide that conversation. But they also want, and what enterprises are looking for, is also to get insights on what their customers are doing with their product, being able to talk to consumers, start to understand the demand, understand where the challenges are. So I think that what enterprises are seeing is that these channels are really preferred by them because they get some insights into the consumer. And then consumers love it because consumers find them easier and faster to use. Consumers want self-service. Some consumers prefer to avoid talking to humans. And I know it's a bit of a cliche, but I've got a 17-year-old and a 19-year-old sons at home, and they will do everything they can to avoid talking to someone as a support call. They'll first look on YouTube, then they'll chat, or they'll use a bot. But it's just definitely a millennial thing. But I think that's growing, and everyone is starting to think, if I can self-serve or I can use a bot, then why do I need to sit and wait to talk to an agent? So I think that's why we're seeing a big growth in the sort of the self-service in the digital CXM space. So it's customer demand as well as enterprises reeling there's a lot in it for them in terms of being able to reduce volume, but also being able to get more insights into their customers too. I think Sarang now is going to talk a bit about what we're actually seeing when it comes in terms of digital CXM and the areas that are being focused on.
Now, speaking about next-gen digital capabilities, what we have observed is that among all the ones that there are in the market, conversational AI is among the top priority for enterprises. And there are a number of reasons for this, primarily because conversational AI can enable enterprises to build a truly next-gen contact center operating model that entails different technologies that we see here on the slide, and enable an ecosystem where they can work together in synergy. This can greatly enhance the operational efficiency and deliver superior services to the customer using this technology. Now, what we've seen is that there are many business challenges that conversational AI solutions can help solve for the enterprises, including things like higher enablement of self-service that David was just describing, or better agent monitoring and support for increased productivity. Then enhance customer experience through better accuracy, faster resolution, and in true omni-channel environment where customers can juggle between different ways of interacting with the brand. Finally, conversational AI technology can also provide round-the-clock support and the flexibility to enterprises to scale up or scale down according to the demand, and eventually lower the operating cost, improve security, and increase the uptime for their operations.
So Sarang, I think we've all had experiences with the conversational AI, and it's a big part of that with the future investments there. And I've had mixed results. Okay, I mean, sometimes it's been a good experience and sometimes it's not been. But if an enterprise can get this right, what's the upside benefit in terms of cost reduction?
Well, Michael, the possibilities are really endless if you ask me. But given where we see the current technology and the maturity of the solutions that are out there in the market, we see that in an optimistic scenario, anywhere between 50 to 30% cost savings are possible to achieve through, transferring some of the more transactional or simple transaction queries to conversational AI, and while the human agents handle some of the more complex pieces on their own.
Yeah, and I think the key is they're getting it right, because I think if it's not done right, it actually can be a detriment in terms of the overall brand experience or the customer experience there. So I think getting it right, but a big upside if we can do that.
That's correct. Now, what we also see is that messaging has seen tremendous growth in recent years, as there's an increasing preference from customers to use messaging as a channel over traditional channels. And what we also expect is that messaging will soon leverage more data sources and technologies that can deliver smarter, personalized, and contextually driven services for the enterprises. Uh, Another benefit that we see is that messaging allows users to connect to a brand at a moment's notice, to have conversations, ask questions, schedule appointments, and make purchases through messaging services on different channels such as enterprise website, SMS, hosted messaging on social media platforms such as Facebook Messenger, Apple Chat, and WhatsApp for that matter as well. What this allows is enterprises to personally engage at a scale with people on platforms that they're already spending a lot of time on. Now, speaking about an example that we see here, Apple Business Chat, which connects consumers directly to brands such as Wells Fargo, Home Depot, and Marriott who are using it, can integrate offerings around Apple Maps, the iOS search engine, and messages across the user's iPhone and other Apple devices in the ecosystem. Users have the option to initiate direct messages with the agents that are representative of the brand via the messaging app. And this chat can also be synced across other apps such as Calendar and Apple Pay to schedule appointments or make purchases. All in all, this creates a very holistic customer experience that is built on messaging. And we're seeing Google working on similar functionality on its Google My Business app as well. If you can move to that. Now, another trend that we're seeing is that as enterprises move their IT to cloud, similar trend is also being witnessed in contact center. And further, there's a demand for integrated offerings, which has resulted in huge interest for contact center as a service or CCaaS in the market. We're seeing that CCaaS offerings offered by leading vendors in the market offer entire ecosystem of cloud-based solutions that are required within a contact center, both traditional as well as digital, in a single package. Now, what this allows is the buyers to source their entire technology stack from just one provider, which significantly reduces the effort and resources in procuring solutions for them. We've also seen that CCaaS enables seamless integration of different digital technologies and solutions, and it provides the modularity to integrate future solutions into the ecosystem without undertaking expensive overhaul of the current technology stack, which is a huge advantage for the enterprises. If you can move to the next slide. What we see that CCaaS also has a number of other benefits. It caters to organizations' need for platforms that can assure uninterrupted business continuity. And this is something that has become even more crucial as enterprises now consider BCP as a crucial element of their planning. It is also able to address enterprise needs and concerns around security, privacy, 24/7 round-the-clock availability, intuitive interfaces for the agents, as well as advanced integration capabilities. Now, CCaaS also offers scalability as operational needs change and provides flexibility to the enterprises to pay only for the technology that they need and use, which results in significant savings by reducing operational costs and also bringing down the upfront investment of the capital expenditure. What we've seen is that driven by these benefits, there's a lot of interest in the market, and this has brought different vendors in the market, both traditional contact center vendors, as well as new players that are offering compelling CCaaS offerings to the customers.
Michael, you're on mute.
Yeah, sorry. So that's kind of the setup for the rest of the presentation here, where we're going to speak to the market adoption trends in terms of the service providers, and then we'll actually get into naming names on the final section.
Great, thanks, Michael. So as businesses have been focusing on navigating through the challenges in the wake of the pandemic, we are seeing that outsourcing adoption is accelerating. This is because enterprises have seen the value that outsourcers can bring, both in terms of resiliency and in terms of flexibility. Also, in a cash-strapped environment, enterprises really can benefit from the investments that service providers have made or are currently making in developing capabilities in areas such as supporting work-at-home agents. So otherwise, we call it WAHA, acquiring talent, and technical domain, as well as process expertise. In addition, especially during these periods of uncertainty, it's incredibly attractive for enterprises to shift some of their risk to third parties through an outsourced model. They expect their service providers to effectively manage the risks around business continuity, security and privacy, as well as exposure to fixed costs. And so for all of these reasons, we are seeing growth in CXM services and business process services as a whole. And on the next slide, we have actually updated very recently our projections around the market size for CXM outsourcing. In 2020, even we were surprised that the recovery in the latter half of that year more than offset any pandemic-related declines. So if you have been following our research, originally we had thought that the CXM outsourcing market would contract in 2020 due to a combination of supply side issues, because as we know, the global lockdowns kind of created some complexities and challenges there, as well as a continued depression in consumer confidence impacting CX volumes. However, in our latest data that we've gotten, the data is saying otherwise. Instead of a negative growth rate that we originally anticipated of about 3 to 4% in 2020, we're actually seeing a positive 3 to 5% growth instead. And so global CXM outsourcing revenues, we believe, reached around 90 billion in 2020, and we're forecasting that this growth will continue in the next few years and reach nearly 100 billion by the end of 2022. This growth will be driven by increasing implementation of digital solutions, as we talked about in the last section by David and Shirang, a shift towards an integrated data-driven customer experience that focuses on personalization and customization, an increase in interest from first-time outsourcers looking for support to transform CX for their customers, and buyers that feel that they lack the requisite experience and technology capabilities to manage, the CX demands that will come post COVID-19. So all of this is leading to a very exciting time for what has previously been considered a fairly stagnant and mature CXM outsourcing market.
And when we look at this growth across different geographies, what we see that the pandemic has had a varying degree of impact across different regions. Now, governments in the more developed markets rolled out fiscal measures early on to support the economy, and that has also aided the resilience shown by the CXM market in these regions. So for example, when we talk about North America, UK, and to some extent even Europe, these markets were able to weather the storm better, and the growth of CXM in this market or in these markets was supported by a number of factors actually, such as demand for digital capabilities, including automation and AI machine learning based solutions, better infrastructure to support remote working, and the resilience of enterprises in this region to survive and overcome the economic downturn that this region faced. On the other hand, when we talk about emerging economies in Asia Pacific and Latin America, they were impacted more severely in the short term. However, we feel that the increased need for digital transformation in these regions, as well as demand for CXM services from first-time outsourcers, both of these factors will result in a quick recovery for CXM services in these regions. Then finally, Middle East was another geography that did reasonably well, and this was partly because the pandemic was less severe in this region compared to some of the other geographies, and there was demand from both the local players as well as global corporations that were operating in this market. Then, if we move on and take a look at how the market performed from an industry perspective on the next slide, what we saw was that technology and fast growth tech, or FGT, this emerged as a clear winner in 2020 and witnessed one of the fastest growth in the market as enterprises in these industries sought to increase support from third-party vendors for driving digital transformation, as well as new growth coming in from subsegments such as streaming, gaming, edtech, and fintech, all of which did really well in 2020. And then we also saw that retail was another beneficiary of the overall change brought in by the pandemic. The industry witnessed a healthy growth as businesses across the globe transitioned to online e-commerce models and adjusted to interacting with the customers on digital channels for which they sought support from third-party service providers. Moving on, some of the macroeconomic tailwinds on the previous slide, please. Some of the macroeconomic tailwinds, as well as low interest rates, along with the ample opportunities for automation and government stimulus. All of these factors led to a surge in demand for outsourcing services within the BFSI vertical as well. And we expect that this trend will continue for some time, even in 2021 and 2022. Then speaking about some of the other major industries, healthcare, we saw that it was under pressure in the first half of 2020 with many of the elective treatments getting delayed and pushed back. But second half of 2020 saw some green shoots and recovery in this industry as emphasis on retaining skilled talent, increasing demand for telemedicine, appointment scheduling, remote medical consultation, and dedicated lines for COVID brought back some of the demand. Then finally, some of the other industries, such as telecom and media, travel and hospitality, manufacturing, and even in industries like energy and utilities, they saw severe impact on the revenues because of challenges around demand side as well as supply chain pressures, employee absenteeism, as well as limited work from home opportunities in these industries. However, as the global economy recovers from the lows of 2020, we expect that the recovery in these industries will drive the overall growth in the market as well. If we can move to the next slide, please. Speaking about the adoption of CXM services from a channel perspective, we see that voice remains the preferred channel for delivery with almost 80% of market share. However, 2020 was an interesting year and we saw that voice was under significant pressure and saw massive volumes moving to non-voice channels such as chat and email due to supply side issues with a lot of offshore delivery locations such as India and Philippines lacking the infrastructure to support voice in a remote environment. Now, with service providers adapting to work at home and better availability of hardware and digital tools, we've seen that voice has made a good recovery in the second half of 2020. But the long-term trend still stands that low complexity work has been moving and continues to move from voice to some of the other channels such as chat, email, and social media, which is resulting in overall decline of market share for the voice channels. What we also see is that there's an increasing customer preference for connecting with brands across different digital channels to resolve issues. And the benefits are many. Digital channels offer speed, convenience, as well as more seamless integration with digital solutions, such as virtual agents or self-service solutions, which makes it much more easier for customers to use these channels. And we expect that some of these reasons will continue to drive the high adoption for these channels even in the near future.
Shirang, I see a lot of movement here. The chart doesn't, the graphic itself doesn't, show big changes there, but in a relatively short period of time from 2019 to 2020, we're seeing that almost 20% growth in these other omni channels rather than just the voice. So the overall interactions are still going up, but it's really that amplification in those couple categories at the top that's really the remarkable thing, right?
Absolutely, Michael. And this is one misconception that we often hear, that voice as a channel is dying. I would strongly say that's not the case, definitely not the case. Yes, some of the other channels such as email, chat, they're growing at a much faster pace, but voice is still pretty much in the game and is actually growing volumes. Not probably at the pace that some of the other channels are, but we're still seeing increase in volumes even on voice channel. And as more of digital technologies are even leveraged on voice, we expect that that'll continue to be the case.
Yeah, and I think with the changing business models at the core of many retailers in other industries, that's going to continue to drive that. And then if you can get the technology right and the cost benefit from that, then that's going to continue to drive the mix change as well. So and customer preferences. So I think this is not a short-term thing. I think this is going to see lots and lots of activity, and you may, eventually you're going to have voice start to peel back maybe a little bit, but continued expansion across the board there.
Right. All right, then moving on and looking at the market and sort of pricing models that enterprises are adopting when they engage with third-party service providers, what we see is that input-based pricing, which includes pricing models based around per FT or per hour based pricing, they hold the dominant share among all the commercial constructs that are deployed. However, what we see is that there's an increasing preference for outcome or output-based pricing, which is also driven by the digital transformation deals that we're seeing in this market. What we see is that hybrid pricing models, which usually involve more than one pricing models, they're increasingly being adopted and favored by enterprises as the demand pivots towards digital first. A lot of first-time outsourcers also expect that service providers need to add some value to the business while maintaining risk neutrality. So they prefer to go for hybrid-based pricing models. And then what we've also seen is that outcome-based pricing models, which enable risk sharing during primarily digital transformation-led engagements, they have also seen some adoption in the market. Some of the key customer experience metrics on which these outcomes are measured include things like CSAT or customer satisfaction, as well as the NPS score. We expect that in the near future, the adoption of outcome-based pricing will increase, although at a slower pace compared to some of the other pricing models, such as output or hybrid-based models.
Yeah, and this is a trend we're seeing across the board. We're seeing this in other areas of the outsourcing where when we moved to the labor arbitrage opportunities of India and other low-cost locations, we saw a lot of input or labor-based rates. So now I think there's a general across the board, not only in the call center or customer experience, but also the applications maintenance development and some of the other BPO functions where that output-based conversation, output-based pricing becomes key. So I think that will continue to move forward here as well. So the outcome-based pricing is certainly a tricky one. I know I've talked about that in my entire career, but it's a tricky part because you often get into a control conversation and who takes the benefit and who takes the risk on things that are not necessarily going to be totally within the control of the supplier. So, all right, well, thank you. Let's move on and get one more quick poll from the audience here. And so the question here, and we'll open up the poll, is which of the following changes did you make or do you plan to make to your CXM supplier portfolio? So for those that are buyers of services, are you looking to make change? And so we'll leave this open for about 30 seconds here. And again, the opportunity is to reduce the total number of providers, shift work among existing providers, add a new scale provider, add new specialist providers, or no change at all. Okay, it's a little bit of a horse race. And David, I'll get you to provide some commentary here if you will, but all right, let's go ahead and close it down in 3, 2, 1. Okay, it was a bit of a horse race there. Two clear areas at the end, adding new specialist providers and adding new scale providers. So it looks a little bit like some experimentation is in the cards here.
Yeah, it's interesting, Michael, I think, because as you say, if people are looking to add specialist providers, that's probably around particular skill sets or particular types of activities that they're looking at, or whether they're bringing in particular types of technology. And then the whole champion challenger model I find really interesting in terms of, is that because existing providers haven't stepped up and performed during the pandemic? Is it that people are looking for more business continuity? So I think there's probably more questions than answers, but it is really interesting that those are the two. And I think there's probably people are looking at their portfolios right now. How do they balance them? How do they get greater business continuity? And then also as the models are moving and you need new skill sets, do you hire them yourself or do you look at providers who can bring it? So really interesting findings.
All right, so with that, let's move on to the final section here. And so here we're going to be talking about the service provider landscape. And David, you're going to take us into the land of the peak matrix. And man, there are a lot of dots on there. You could throw a dart and you could hit. You're definitely going to hit somebody there. What's your how do you look at the chart like this when there's so many dots on the page?
Yeah, thanks, Michael. Yeah, and I mean, there are a lot, and I think it's a great strength of the peak that actually we have such a broad remit that we look at. And actually, having been a buyer myself in my previous career, I know it was a great resource to look at and go, who's on the market that we should be thinking about working with. So I think it's definitely a great resource both for service providers and for buyers to be visible in the peak. I think what we're seeing is that you can read the names on there yourselves. I'm not going to sit and read the names, but I think what we've seen is that the leaders have been consistent in their delivery of CX services through their expansion, both organic and inorganic. They've also entered into new geographies. They've also entered into new verticals. And also they service buyers of all sizes. So they look at the small, the medium and the large buyer. They also have really strong client satisfaction because they bring that domain expertise as well. And that also gives them access to a greater talent pool and also be able to be really proactive. We're also seeing the leaders really investing in the digital capabilities. And that's not saying the rest aren't either, but really those digital capabilities like RPA and omni-channel and analytics, but also they're driving innovation beyond just the technology, as we talked about earlier, and actually investing in technology, in consulting as well, the consulting services to really help sort of enterprises be able to look at that end-to-end journeys, whether it's customer journey mapping or design thinking, and they're investing in those areas to then be able to have a really robust solution. So we're seeing leaders do that. And what we're also seeing is leaders are still staying true though to having that good mix of high, medium and low cost labor markets that they can support from. Now that really gives an enterprise buyer a good sense that they can support me in any market I want to be in. So that's how we're seeing leaders be successful. Is they're really leveraging their scale that they've had in the past, their locations that they've had in the past, but are investing in the future technologies and the skills that they're going to need moving forward. In terms of the major contenders, they're also building these capabilities as well, and they're actually serving different geographies and segments, and they maybe not have such a universal reach as some suppliers, say the likes of Capita on here, for example, very focused more in the UK and EMEA market. And there's others there as well. So I think that what we're seeing is that the major contenders that we have great capabilities in these areas, such as in the technology, in the consulting, but may focus more on a particular industry vertical or in a particular geography. And then when we look at the aspirants that we have on the list, these are really normally particularly focused on one regional vertical, or may have just a relatively low, relatively small scale CXM operations today. But again, that's not to take away the fact that they're also building these digital capabilities, but also because of their size, quite often can really offer innovative pricing and staffing models, are really embracing some of those to actually try and then move up to become a major contender or a leader. So I think there's real strength across all of those three areas. So the aspirants, the major contenders and the leaders, they just tend to be servicing different markets, or the leaders tend to have a broader set of capabilities across more geographies, across more verticals, and being able to service all types of customer types.
So David, one of the downsides in a chart like this is the easiness to focus on the upper right. And so, you know, there's certainly some reasons to look up there for sure, and would not say, you know, it's probably the safest place to go. But I think there's also opportunity in some of those in the middle of the pack there, or even some down the aspirants there that can really bring an interesting or new perspective for your specific situation. So whether it's an industry view that you're looking for, or a new flavor of the month, you may not find that in the upper right. You maybe find it somewhere else.
I totally agree. I mean, I think this gives you a sense of who the big global players are, and then the rest of a lot of the others on the chart have unique skills. And I think as a buyer, what you need to be thinking about is, what do I need for my service provider? Do I need scale? Do I need to have an industry expert? Do I need to have someone who's got a domain expertise in a particular vertical? Do I want someone who's got an expertise in a particular geo? And then you build your supplier list from there. And the peaks for me is always a great starting point to build your list. But then you narrow it down based on what skills and capabilities do I want. And sometimes going to a leader isn't going to be right for you. sometimes going to an aspirant is going to be better because they've got the skills you need. So it's really being clear about what skills you need from your suppliers, and then narrowing that list down based on who can provide the skills that you need.
Yeah, when I've gone into supplier selection discussions with buyers on this conversation, I said, listen, bring a little bit of, bring different flavors to the table, and you'll get a much more robust conversation, and you may find something that's more beneficial to your organization, and it'll certainly be more interesting.
Yeah, and if I can just kind of jump in as well, just as a reminder, this is a huge market. We talked about it being about $90 billion and going up towards 100 billion. So what we represent here, even though it does seem like a lot of dots, it's only a fraction of the service providers and the players that are out there. Obviously, these are the ones that we cover, and we believe that they have strong reputations and capabilities and skills. So no matter where they actually sit within that matrix, all of them are good choices for enterprises to consider partnering with.
Yeah, thanks, Shirley. Totally agree. I think on the next slide, we just look a little bit about the geographies, and this really just shows that, I mean, from our perspective, when we look at this, there are the consistent ones who are strong in all geos, and that's the likes of the Concentrics and the Teleperformance, and they're strong across all of the 4 geographies, and that probably makes sense considering they're the biggest in the market. I think what we also see there, though, is that there are, from an EMEA perspective, for example, you've got the likes of Capita, who are very strong in the UK market, strong in the public sector in the UK. The likes of Webhelp as well, who are focused primarily in continental Europe, but with expansion plans. And then if you look in the likes of Latin America with Atento. So what we're seeing is that you've got the global players who are strong across the globe, and then you've got some strong regional players. But again, just to echo the point we made on the previous slide, I think if you're looking at a particular geo, it's good to look at the global players, but it's also good to look at some regional providers depending on what your requirements are. And I think as buyers should just be looking at what are my requirements and then matching that up to what each of these providers brings. But yeah, strength on a global basis, but also there's strength in the regions as well. And then I think on the last slide, we talk about just the strength in any of the particular verticals or industries that we look at. And again, I think that what we're seeing here is that there is a spread, and there are certain providers that are focusing in particular sectors such as BFSI or healthcare, where they're really making that their focus. Others are strong across all of the sectors. So again, Teleperformance tend to be one that show up in across all of the verticals. So I think it's whatever vertical you're in, there will be some industry specialist players that you could be looking at. And then also I think that there's some that more of the generalists. And I think, again, depending on what your requirements are, it's worth taking a look at the complete supplier base and making your decisions based on what you need from a business perspective and the type of suppliers that you're going to work with. And I think one thing is not necessarily always covered, but also the cultural alignment with the supplier as well is something that in the past I've always looked at, which is the types of suppliers that you feel that are going to best fit the culture that you're working in as an organization as well. But yeah, a good mix across all of the vertical industries, across all of the larger suppliers.
All right.
If I can maybe jump in, one last piece is that in addition to the industry segment view and also the geographic view, there's also specific capabilities, right? And one of the recent reports that we came out with looked specifically at work at home agent model. And there are some really interesting pure play work at home agent service providers as well. So encourage people to access that report and take a look at some of the other service providers that are out there, that particularly because work at home and remote working is such a focus for a lot of organizations.
And last point is probably just worth it out. I mean, this is our 2020 peak, and we're right in the middle of the 2021 peak now. So that we will be updating this later in the year. We've obviously updated information based on everything that's happened in the last 12 months.
Yeah, actually, it should be coming out in the next 2 months.
All right, Shirley and David, thank you for your insights there. And if you have questions, type those into the Q&A panel, and we'll see. We'll have a few minutes here at the end to answer those. we have one final option here for you. We do this as a kind of as a quick poll to see if you're interested, but the best way to get to know us a little bit better is if you're an enterprise and you're interested in getting a slice of data. That's what people always look at us and say, hey, you guys have great data. If you're interested in getting a slice of data and you're an enterprise of one of the specific service providers on this list, and we've just taken a list of, you saw there was many more dots on here. We only have the option in the Zoom poll to do 10. So choose the one that you're most interested in, and Shirley and David and Sharon will get back with you. One of them will, and provide you what we have on that provider. And there is another category down there if you're interested in that's not listed here. We can work out something here, but we'll have to deal with you, interact with you post webinar. Okay, we'll leave this open for another 3, 2, 1, and we're not gonna. This is not meant to be a horse race, so we'll close the poll off now, and we'll go into our final section, which is the Q&A. All right, so the first question we have here, and I'll let one of you guys jump in on this. Which one's ready to answer this one? It's a long question, so I'll try to summarize it. But considering the options of digital transformation initiatives by customers, what's the typical time frame which customers are looking for ROI realization? You may want to give an insight into that.
Go ahead, Shirley, ladies first.
So kind. What I was going to say is that I think I think the time frame that buyers and enterprises are looking for has gotten shorter, particularly with the kind of financial pressures that a lot of organizations have been facing. They do want to capture some of those cost benefits straight away. And actually, I think I mentioned that a little bit earlier. You know, that is one of the primary benefits of an outsourcing model, as well, is that you have some levers to play with, including some innovative, perhaps kind of commercial models that you can put in, and kind of co-investing with service providers as well. So I would say, you know, I think the longer version of the question was saying that sometimes it takes about 2 to 3 years for investments to start generating returns. And so what buyers are looking for is oftentimes that co-investment from the service provider, the willingness to take on that investment risk and pass on some of those savings earlier than waiting the 2 to 3 years. Most likely actually within the first year.
Yeah, and I would just echo that, Shirley. I mean, I think that before I joined Everest at the start of the year, I was working consulting for 3 years, and we had a couple of clients who were saying if it wasn't break even or the ROI wasn't in less than 12 months, they wouldn't consider it. And whether that came from a real ROI or through investment from the supplier, but they were looking at less than 12 months, they wouldn't even take it to the board for sign off. So we've seen that timeline shorten significantly as well.
Yeah, and I think you can do a deal quickly. That's not the challenge. The challenge really is going to come back to data. If you're trying to make a real change here, it's going to come back to the state of your current data and your current systems. So if the data is not available, or it's not clean, or it's just, you know, hard to get to, or it's disparate, or whatever the challenge that you're trying to work through, that is going to dictate. Until you get that right, you really can't change the actual experience itself until all that stuff comes together, right?
Yeah, no, I agree. I mean, the data has to be clean, but then, and I think it's also, you've got to be looking into, well, what are you trying to change, and what element of this experience are you trying to change as well? So there are lots of parts to that question, but I think that, yeah, you're right. You have to get the fundamentals right before you're going to make any significant changes. But yeah, to the ROI point, it's 12 months.
Yeah. Well, I mean, and there's some things that can help change that faster, like RPA and some automation things that can kind of fake your systems compatibility, or fake your systems talking nice to each other. But anyway, all right. So next question we got here is, any thoughts on the gig customer experience model that you're seeing in the marketplace? Anybody want to jump in on that one?
So I can kind of start off. It's definitely a question that is coming up actually quite a bit from both buying organizations as well as service providers alike. You know, we talked about the benefits of work at home from a flexibility standpoint. I mean, Gig CX just kind of takes it another step further than that. And there are really distinct differences between Waha and Gig CX. And in fact, you know, David actually did a really good blog on that on our portal that kind of talks about what that is. So there's a lot of growth. There's a lot of interest in leveraging the model. I would say so far it's applicable for perhaps not all types of inquiries that CX kind of deals with, but certainly within particular segments like the technology segment, for example, they're really, you know, pushing to explore this further.
Yeah. And I think it also works really well where you are looking for those brand advocates. I know a lot of the Gig CX companies have pushed the brand advocate point, and I think that where you can get people that are really using your brand and know the product to then support other clients, I think that's what really works well. And I think it has a real place in the market. But as Shirley said, I don't think it works everywhere. I think it works for particular contact types. I think it works for particular interactions. And I think, again, it's part of your portfolio that people can use and buyers can use, but it's not going to solve every customer experience need that you have, but it will have a place, I think, as we move forward, as people look for more flexible operating models. And it does bring benefits in terms of cost savings, et cetera, because of the flexibility it brings. So definitely got a place, but not going to solve every problem.
Sharang, did you want to add to that?
Sure, and I also think it's a matter of maturity now, similar to Waha, what we saw. Waha as a delivery model wasn't, you know, readily adopted when it came. In fact, it took an entire pandemic for enterprises to warm up to the idea of leveraging a remote delivery model. Similarly, I think over time, enterprises will warm up to the idea of Gig CX once they see the sort of benefits that it has to offer. And like Shirley and David said, you know, it's a unique model, significantly different to what Waha has to offer and has its own set of advantages. So it is comparatively new in the market right now, but give it a couple of years and we definitely expect that the adoption will go up.
All right. So I want to thank our panelists here, Sharang, David, Shirley. Great insights, great data. And I wanted to also invite our audience here to check out our latest blogs. So you'll see lots of friendly pictures there, lots of interesting comments up there on this topic and a lot of other topics. And then also, if you're looking for content specifically, tons and tons and tons of content available in this segment. And so we do a really heavy focus on the customer experience and the markets. And so absolutely take advantage of those. And again, for those that want to get some input back on the PEAK matrix, from that we'll be following up with you, and have a great day.